The Indian currency continues to hover around that $70 mark, and it's bound to impact almost any company that has got a sizable exposure to foreign currencies. While one can pick trends based on the nature of business, it would be wrong to paint all the companies belonging to a particular sector with the same brush. So Darshan is here to bifurcate and tell us why it is wrong to paint every company with the same brush. Darshan, good morning. What do you have for us?
Yeah, so basically, Neeraj, if you're looking at it, this is the trajectory of the rupee and how it has depreciated against the dollar right from 2008 up to currently where we are in 2018. Basically, there were two trends. First of all, in 2013, there was this big surge that came in where the rupee depreciated very sharply against the dollar. And again, we are seeing a similar trend where there has been a sharp depreciation as far as the rupee is concerned. So this is basically the rupee trend that we're seeing. Apart from it, let's take a look at how the markets have moved and the reaction that we've seen. Now, the white line is the Nifty, the normal Nifty, and the blue line is the Nifty if returns were in based on dollar terms. Now, the return for the Nifty from a YTD basis is basically 10%, and that much is how much the dollar has depreciated, which means that the Nifty in dollar terms is actually zero. They haven't gained anything. 0.12% is the gain. So FIIs who have been putting money in the Nifty, despite the Nifty moving 10%, have not made a single rupee, given the fact that the dollar rupee equation has gone against them, and that is why we're seeing a lot of fund flows and FI selling in the market. So this is basically the trend is. Basically, what does a rupee weakening mean for this? First of all, no doubt it helps exporters, but this may accelerate the FII outflow both on the equity side as well as debt side. There is increased volatility in the equity, and the joker in the pack now is the crude prices, because rupee is weakened but the crude prices are not coming down. So that's a double whammy as far as India is concerned. Basically, the gainers are the exporters. You know, you have your IT and pharma, which are the front runners. The losers will be the importers and firms with a large foreign exchange debt. So that's about the companies or the sectors that get impacted. First of all, let's talk individually. The IT pack. Now, a 1% drop in the rupee dollar means a 20 to 25 basis point jump in the operating margin. So as of here, this on a YTD basis, it's up almost 7%, and in the second quarter, the dollar is up almost close to 2%, which will mean that in the second quarter, in the first half, probably you'll have a 40 to 50 basis point improvement in the second quarter margin, because in the second quarter itself the rupee has depreciated 2%. So expect IT companies to come out with a strong set of EBITDA margin. Secondly, unhedged income will rise for them, and 60 to 80% of the exposure is usually hedged. So some of the companies which don't have an exposure, unhedged exposure, they will definitely benefit. So that's the IT pack for you. Pharma pack, that's the big one. That also benefits, and you've seen pharma on an uptrend. Now, companies with a high export component will benefit. So companies like Divi's, Aurobindo and Biocon benefit. Now, Divi's, it's a double benefit because the fact that rupee is gaining, they have a sizable export and they don't have any hedge. So Divi's benefits the best, and it's trading at record highs. Aurobindo Pharma and Biocon also gain significantly, but they are partly hedged. So that's the impact that we are seeing. Now, generics like Dr. Reddy's, Sun Pharma, Lupin, Cadila, and all of them have a limited impact. No doubt they benefit significantly from the rising dollar, but at the same time they have a high India exposure also. So the impact will be much less than what we've seen for an Aurobindo Pharma or a Divi's Lab. And the MNC Pharma, it's a negative impact because they import significantly from their parent, and that is why they will be negatively impacted because of the rupee move. The other pack that we want to talk about is basically the metal pack. Higher realizations will come in because of exposure, because they are linked to global prices, and domestic prices depend on the import parity. A lot of companies which have their cost in dollar, and then they have their realizations in dollar, like a Hindustan Copper or a Nalco, will benefit much higher. Now, basically, in terms of, that's what I was saying, Nalco and Hindustan Copper, the costs are determined in rupee, but the realizations are in dollars, so they benefit. Hindalco, Tata Steel, Vedanta, they have a dollar denominated debt. So on one side, for the exports and the overseas operations, they benefit, but because of the debt, that's a negative impact. And the non-ferrous players are impacted much better because realizations are dollar denominated for them.
Interesting. Just keep in mind a standard disclaimer that for a lot of the companies, as Darshan mentioned in the Rupee case as well, it's only to the tune of the unhedged exposure. Companies like Sonata Software, for example, a case in point which mentioned that a lot of their exposure is completely hedged and therefore the rupee depreciation or appreciation may not impact them that much. But Darshan, while you've given us a broad exposure about the usual suspects, what about companies which won't be too happy with a weaker currency?
Yeah, so basically aviation for one, because 60 to 70% of their costs are dollar denominated. They have a huge chunk of expenses which is fuel, which is again dollar denominated. So oil marketing company, so the aviation pack definitely does not benefit. There are forex losses also. Now, if you're looking at in the first half of the calendar year, what we've seen is Indigo has reported a forex loss of almost 340 crores. For SpiceJet, it's close to 67 crores. And Jet Airways, they haven't reported the first quarter numbers. So in the fourth quarter, they reported a forex loss of 133 crores. So that is how aviation gets impacted. So that's the impact there. On the oil marketing company, crude is bought in as far as dollar is there, and that is why they are negatively impacted. They can partially pass on the impact, but nevertheless they are impacted definitely by them. And you can look at the foreign exchange losses by all the three oil marketing companies, and because of how the dollars moved up, they had to report forex losses. The other pack that I want to speak about is basically the paint company. 50% of the raw materials are dollar denominated, titanium dioxide as well as crude. They have to buy in dollars, and with rising costs, they will have to have an impact as far as their top line, as far as their costs are concerned. No doubt they pass it on, but nevertheless the gross margins have come down from levels of as high as 50 to currently as low as in low 40s, or probably just close to 40. So this is the gross margin impact that we've seen as far as the paint companies are concerned. So they get impacted negatively. Media not too much, but exceptly for the distribution companies, because their capex are dollar denominated, especially the set-top box, and that gets impacted because of the dollar denomination. And cement pack not too much, but they import a lot of diesel as well as petcoke, so that is impacted. India Cements definitely gets impacted. They have dollar denominated debt, and that is what gets impacted because of how the rupee has shaped up against the dollar.
Well, that's an interesting analysis and a ready reckoner of sorts of what would happen under normal circumstances to almost all of the sectors which get impacted because of the currency depreciation. If you flip the argument around, currency appreciation as well, do the reverse. Keep in mind, this is the textbook impact. Some of the companies have hedges, and therefore the impact is not as much. So it would vary from company to company. But if you wanted to know a bit of a ready reckoner as to which sectors get impacted and on a textbook basis how much, well, this was a really interesting piece to monitor.